is expected to garner good growth in demand over the coming years, with experts especially bullish on the sector. ET now spoke with the CEO of CanFin Homes, Mr. Girish, on the book of the company, the industry, as well as the growth prospects. The company expects to double its book over the next 3 to 4 years and expects a 18 to 20% growth in FY22. Over the last year, Mr. Girish believes that there has been a flight of capital from housing finance companies to banking companies. Part of the reason for that, Mr. Girish tells us, is the fact that banks have an inherent advantage insofar as they are able to track both incomes as well as deposits of individuals who are salaried as well as non-salaried. However, he also believes that there has been a shift in trend with regard to disbursements. He believes that disbursements have shifted more towards the salaried individual segment. And this, he believes, is primarily due to the non-salaried business segment suffering due to COVID. However, over the medium to long term, he sees this leveling off. He says that the Q4 results were probably the best for CanFin Homes, wherein the bank posted its best ever profitability. However, Q1 of FY22 was a bit poor for CanFin Homes, for the company. Further, he sees Q2 being a good bounce back from Q1 and pretty much in line with Q4. As regards the industry and what is happening in the general ecosystem of housing finance companies, he believes that overall the liquidity is easing out in the industry with rates stabilizing and property prices at their lowest. What he also sees is that yields are lower, but margins have continued to be in line, which means that the sector will continue to see good profitability. He also sees competition as being heated over the last year or so. However, he sees competition cooling off. He sees that compete, especially from private and PSU banks, has been severe over the last year or so. However, he also feels that the market is large enough for the compete to survive. What he also says is that the ticket size that CanFin has been catering to has gone up from 18 lakhs to 20 lakhs, which has taken them to another trajectory, to another segment of customers. As regards demographics, CanFin Homes has little or no presence in the east or the northeast of India. However, other than these two particular sectors, he feels that across the country, housing finance loans have seen a clear growth and a clear uptick. What he says is that top cities are contributing to this particular growth and uptick, as well as the small town growth has also been robust. He says that CanFin Homes is focused on asset quality. Along with the 18 to 20% growth, they believe in stabilizing the asset quality for the company. The stock has gone up roughly 25% over the last 6 months, a good solid growth. And the stock was up 4%, 4.5% in fact, in trade today.